Devon Energy. I forget if they're, so these guys are an independent energy company engaging in the exploration, development, production of oil, natural gas liquids in the US. So they go out and find the oil, and then extract it, and then get it somewhere where it could be transported or put into a pipeline. And then somebody else is going to refine it. And then somebody else is going to retail it. And they call that downstream. Midstream would be the refinement of the product. These guys are upstream. These guys, every time I look at energy companies, it's a little bit like the story on China. It's going to show a lot of value. It's just investors have not been buying. Over the past 5 years, you see that for a while, this thing looked like a genius investment. Look at that upside. Beautiful. But then since, guess, the middle of 2022, not so much. Over the past year, it's down 27.75. Now, oil has been creeping up over the last week or so. Oil companies did have a good day, but overall, oil companies have been doing quite poorly. And I had this conveniently kind of loaded up. These are the 11 sectors that represent most stocks, right? They all fit into one of these sectors. And here's energy, where Devon Energy would be in. And it had a good day, but it's had a crummy month. The year is not even close to keeping up with everything else. You can see that technology just really killed it. Communication services did awesome. Consumer discretionary did great. And even over the long haul, over the 5 years, 59% is okay. But man, when you look at technology or consumer discretionary, communication services, even industrials have done far better. So I think that energy could act as almost like a hedge on when everything else seems to go down. Oil prices or oil companies do well. I think Devon's a good company. It's a $21.5 billion market cap company. It is beaten down. So if anything, it's not going to go down much further. It's going to probably, if there was a positive surprise in 2025 around oil, Devon Energy is going to scream up because it's one of the smaller companies, 21 billion, as opposed to, and I'll show you Chevron, since I've been a Chevron stockholder for a while, kind of compare it to Chevron. Chevron's 260 billion in revenue. So Chevron, if there was a positive surprise in the oil complex and energy, Chevron's not going to like take off like as fast as a Devon. Devon is small, and they'll go from 21 billion in market cap to 30 billion in market cap, representing a nice 40% rate of return quickly. That'll happen very nicely. You can see that when you have higher oil prices, this thing will scream up. It got up to $75 per share. Man, that would be a beautiful thing. $32 a share currently. This thing can definitely double over the next couple of years if you have oil prices and conditions that really favor oil companies. So Devon, I think, provides a positive investing opportunity for investors, but you need to know that, hey, you're not buying, a tech stock that's going to scream up just on a lot of investor sentiment. Let's say a Palantir, which has really gone up nicely for investors. That's been a big sentiment stock, right? People just believe in Palantir. Just a lot of exciting things happening in technology. That's not Devon Energy. Now, the positives that are going to help Devon Energy, you have a president that is very friendly to oil. Now, let's take a look at where Devon was. And I'm going to go a little more into history. Here we are at, this was a dip in 2016. So this is when President Trump got into office, which is, I expected it to be better than that. Yeah, during Trump's last presidency, Devon didn't do very well. But then you had, I don't think there was a reason for it. Just oil prices went up. And when we had the current president take office, these guys screamed up. Oh my gosh, look at that nice rise. Almost 1,000% return on Devon. And look back here. Wow, look at that run. This is high oil prices. When oil prices go up, Devon Energy starts making lots of money. But they can't control that commodity. It's not like they get to say, hey, we're going to sell a barrel of oil for $200 a barrel. Nobody would buy it. They'd be out there with a bunch of oil they can't sell. So instead, they have to take the market's price. And right now, it's roughly at around $71 per barrel. And that's a price that they can make money, but not crazy profits. You get that barrel per oil or price per barrel at $120. you're going to see Devon Energy priced at $60 a share in no time because they're going to be making so much money. It'll be a party over at Devon Energy. So there's my comments there. Again, they provide I think, a positive proposition to an investor, but investors need to know, how does this fit into my portfolio? Am I expecting this thing to be a nice, consistent, like we looked at CTRE earlier? Let's look at that again. CTRE is kind of a nice, smooth, boring company. It's for the year, it's up 20, call it 21%, and they get paid a 4% dividend. So let's call it 25%. That's great. That's great from a nice, boring REIT, real estate investment trust. This is not going to be Devon. This kind of gradual going up and so forth. Devon's either going to be, you're going to double your money in the next 2 years, or you're going to lose a little bit of money. But for it to just kind of go up gradually would be a surprise to me. And so that's what I think of Devon Energy.